Let me now bring on board Anil Singhvi, Chairman of Ican Investment Advisors. Mr. Singhvi, good morning. Thank you for joining us. Mr. Singhvi, let me take the clock back. 3 months ago, there were bulls everywhere, and you were the only bear in the town. You got it right, my compliments. But are you switching camps now?
No, I continue to remain bear. I was very surprised when you saw a lot of bulls and they were talking about, in fact, including rupee and index and stocks and all that. So I don't know where was this extra exuberance which was coming from, but my views continue to remain same, that I don't think on day-to-day basis situations can change. I get very curious when Friday stocks are very low and Monday morning they just go up. So I still fail to understand. I still remain a learner of the stock market, I suppose.
So what will make Anil Singhvi the Parma bear the bull? Because I'm just waiting to hear some bullish comments from you. Last 2 years, I've not heard a single bullish comment from you.
But I don't want to brag here, Nikunj, but I don't think you found me wrong any point in time in last almost 18 months since I have been having views that things are not going well. In fact, people have now started talking about it, which I said earlier also, that in India we have a biggest problem of not having the direction. And today also we are lacking both leadership and direction. And without leadership and direction, I don't think we can really move ahead on that. So it is going to be a range-bound market for some more time to come in. Since you asked this question that when would I turn bullish, I think there are two factors very clearly. A, the policy framework. B, more importantly, I think we want to have the government which takes into consideration and do not remain in denial mode. We have seen government in denial mode for a very long time, and which is not helping the cause.
You know, markets are a forward discounting mechanism. Incrementally, if I look at things which can go wrong from here, I think the list of things could go wrong is a small list, and incrementally things which could improve from here, I think that list is a long list.
Because I don't completely agree with you. My concerns are threefold. My concern is on first, as I mentioned to you, that government continues to be in denial mode. When this morning when I woke up and I saw Prime Minister's statement saying that we are not as bad as we were in 91, I think that made me very nervous on that. That means he's reminding us of what we were at 91. Definitely no one is thinking that we are at the same level, but a Prime Minister who is an economist saying this, that we are not near to what we were at 91, reminds me of the fact that things are really getting very bad. The second issue is that we are still grappling with the inflation. And India has it that whenever inflation has been raising its ugly head, I don't think we have done well in stocks. And neither has the company done in earnings. And I've seen in my own sector, which almost 25 years I was tracking on it, that whenever inflation was high, cement did not do well. And I think it's a barometer of judging how the industry and how the corporate earnings are going to be. And the third factor, which is I think engaging me most, is that I don't think the global situation is anywhere near to repairing. So if these three things are put down very clearly, I'm not so optimistic that things are going to work out very well in next 6 to 8 months.
Anil, the one thing though that is working out for our markets is the cool off in crude. Do you think that impact is somewhat getting negated by the rupee weakness?
In fact, if you look at rupee, it has depreciated more than 20%. So and crude has not yet corrected by 20% on that. So and we continue to consume more and more. So if you look at from economy point of view, still we are consuming more crude oil, and where are our own reserves or resources where we can have our own production going up. So we are so dependent upon import of the crude, and this just from 110, the Brent coming down to 105, 106 is really not helping the cause, because the rupee is at around 56 again.
Anil, if one looks at valuations are looking reasonably attractive. Sensex, based on FY13 estimates, is now trading at a P multiple of something like 12-13 times. Historically, Indian markets have never gone below 11 times, so we are almost there.
I won't agree with you again, Nikunj. Sorry to disagreeing today on every score of what you are saying, for the simple reason that we look at the quality of the earnings and the quality of the corporate sector's governance practices. So I think India is really going to getting derated more than re-rated. So even if we improve a little bit on earnings from, I don't expect in 12-13, but even in 13-14, I think our P is going to be derating because of, you look at the kind of scams which we have come out with, you look at every sector where we are exposed to, and we have, the corporate sector has come out very, very, with a guilty face. So when you look at these kind of scams all around us, corporate sector, the nexus of the corporate sector with the political class, obviously is going to have a derating of the stocks and derating of the Sensexes and Nifties. So I'm not too optimistic on this that right now we are fairly valued, or there is a room for people to start buying now, I think we will derate further. We will have a little more correction coming into the market. Then this market may look a little more room for appreciation.
So you will not be surprised if you go before December lows?
I think we may very well do it. And second point which I am really tracking is the monsoon. And I don't think I have heard yet any confident report on that we're going to have really a good monsoon, which is well spread out. Just by saying that we are going to have a 96% of the long range estimate is not good enough. So unless we have a very good monsoon, I think the ugly head of inflation will put indexes back into 4600, the Nifty into 4600 zone.
So in your personal portfolio, are you sitting on cash? Are you short?
Well, as I discussed last time with you, that it is more of interest-bearing instruments and gold. This one thing which we haven't talked about, but I think in a current scenario, whether it is local or global, people may not believe on gold because globally the gold has corrected from 2000 to almost 1560. But I think time has come when one has to seriously look at having gold. Though the government has been very much after this that one should not buy gold because they've increased the custom duty and all that. But I think gold still is a safe bet.
What is stopping you from selling Axis Bank then? Because I know you have a large position there. If you're so bearish on the market, why not sell Axis Bank?
Yeah, there are some. There are some pockets where you feel that in next 6 months to 12 months.
You have a large exposure to Axis Bank. You are bearish on the markets. You're not selling it. So you're contradicting yourself.
Maybe there's an emotional play.
What's your price target for Axis Bank? Eventual price target.
Sorry, I didn't get you.
What's your eventual price target for Axis Bank? I know.
I think Axis Bank, out of all banking sector, it will go through its own, or it has already corrected for last almost about 30 days at 10% plus. But I think it should touch 1250, 1300 in about 12 months' time.
Anil, how are you mapping the developments in Europe right now? And if Greece were to actually exit out of EU, do you think that's going to be bad news for emerging markets, in particular like the ones in India?
I think we have been engaged into this situation for a too long a period, and to my mind the solution should be let Greece come out, because without Greece coming out I don't think this problem will be sorted out. So sooner Greece comes out, better for it is. We take a one-time whatever hit or whatever nervousness which is going to be there, but then move on. Right now engaging situation is not helping the cause. So I am praying every day that let Greece come out of it, let the stock markets, let the global markets take a big hit. But this is what is going to really solve the problem, rather than engaging for a very long period.
What about IT? It's an easy trade and more like a no-brainer trade. Buy IT stocks because rupee has depreciated. IT companies will make more money.
Well, IT, I don't think is just dependent upon rupee now. In fact, if you look at most of the customers would be really renegotiating their contracts because they know it well that you're making almost 15 to 20% more margin on the same contract previous year. And they all are having budgetary constraints. So I don't think the IT companies are really in a pole position that they can negotiate the terms. I'm still optimistic about TCS out of the larger IT companies, that this will do much better than Infi and the Wipro. And smaller companies like Mindtree or Hexaware would be somewhat better bets than the per se the entire sector.
Anil, what about cement? Is that going to perform at all this year?
Well, cement is, I think, now beginning to get into a mode where demand and supply more or less is matching. We don't have huge capacities which are coming up in next 9 to 12 month period. So long as the demand continues to around 6 to 7%, I think cement will have a very steady earnings growth. But I'm not expecting that cement is really going to do so well in next 6 to 8 months time, because one has to see the monsoon and inflation. These are the two factors where cement industry has been in past impacted to a very large extent.
Anil, if someone walks up to you and is of the view that give me some stock ideas, I'm ready to take a 10-15% pain in the near term, but eventually I want to buy stocks which could be 2x, 3x or even 5x in 5 years. How would you address this question?
As of now, I would just tell them to sit on some interest-bearing securities. Don't look at stocks, because I think in next 3 to 4 months' time, you're definitely going to get much more opportunities. As you rightly said before I walked in, that May is the month classically been talked about, that sale in May and come back in October. So I think I would advise the same thing in the next 3 to 4 months. Keep your money intact, put it in the fixed income bearing securities, and wait for stock markets to correct further.
So what are your
enough
watch
opportunities.
List? What's on your watch list? At what level do you think Axis Bank is a good buy? At what level do you think Ambuja Cement is a good buy? At what level do you think Infosys is a good buy? And the reason I'm asking these three names is because I know you track them with a magnifying glass.
Axis Bank, I would always be looking at buying around 950 levels. Below that, I don't think stock can ever go down on that. So 950 Axis Bank looks very good buy. You have a clear 20-25% upside on that. Ambuja, I think probably about 125 to 130. It will correct because it had a good run past 6-8 months, but it is correcting now. It will correct back to about 125, 130 levels, which is a good buy. Infi, I'm not too sure, Nikunj. I think Infi will go through huge challenges. So my take is that TCS looks to me a far superior play than Infi. So I would avoid Infi at all costs and look at TCS and buy TCS at around 1150 or so. I think it can be a very good play for next 2 to 3 years time.
Anil, you're talking about the market seeing much lower levels from what we're currently sitting at. Does it seem like this is going to be across the board sell-off that we are going to see in reaction with, the deteriorating fundamentals or perhaps some global blow that we are going to get? Or do you think it is going to be much sector specific this time?
I think it will be across the sectors. I don't think there will be safety corners available to us on that. So it will go through one more round of nervous breakdown on the stock market, more so the local scenario and then to some extent the global scenario. I think to say that we are really hit by the Greece problem and all that is really again living in denial mode. So I think unless and until we really correct the situation, nothing going to move. I don't want to bore here, but look at the whole budgetary session. I think no bills were passed, no actions were taken. So we are in a state of flux, and unless we come out of this state of flux, I don't think corporate sector can really do well or economy can do well. So I think we're going to suffer for some more time to come in.
Is there a bubble in consumption names? Because that's the only group which is moving up on a daily basis. We like it, we don't like it, but Levers, ITC, Colgate, Britannia, these stocks are at a new all-time high. And for those who bought these stocks a year ago, they're sitting on a 40-50% gain.
Well, I think these are classically been talked about as the safe havens or consumer stories, but I think once you are caught up into this kind of a spiral where GDP growth rate is going to be just around 6%, inflation is going to be 6.5, 7, I'm not too sure whether you can have these, safe bets going forward remaining safe, whether it is HUL or ITC or Godrej. I think they all will go through their own share of problems, so long they have held on well because they're the last one to get corrected. So whole markets have got corrected, whether it's banking, infrastructure, cement, steel, all that. And these have remained safe bets. But I think now the time has come where people will book the profits into safe bets as well. When they see the markets coming down, they cannot remain in island mode.
Anil, are you hopeful at all that the government will move on policy reforms, or do you think it is going to be pretty much status quo the entire year?
Which government we are talking about? Do we have
the current government?
Do we have some government? I suppose that answers the question, because again same thing is there, that we seem to be having a situation that we are elected for 5 years, whether we work or not, we shall remain here for 5 years. That's a very unfortunate part, I think, unless we really take corrective steps and move ahead on that. Somewhere we seem to be having that everything what we are doing is right and nothing more can be done from our side, which is what is really causing the disconnect between the policy makers and the aspirations of the country.
It's scaring me, my friend. Every time we have you on the show, you scare me and you get me worried only.
Well, that's not intended at all. I would rather be like you, the bullish and looking at for every situation, whether it's a growth or the stock markets and all that. But one can't run away from the reality and face the reality where we are in, and one should not see, because finally you invest to what? To make money, to protect your capital, but you can't get to see that your capital is getting eroded.
And for those who lack the capital and they want to generate capital, what should they do?
Work hard wherever you are. Don't look at stock markets.
Okay, so before I wrap, let's look at a very old market maxim. I'm sure you've read about it, which is from Sir John Templeton, that bull markets are always born on pessimism, and big money is always made when you buy fear and when you sell greed.
Well, I respect him a lot, but I think he's not seeing the kind of leadership which this whole world is right now getting into, that we have huge vacuum of the leadership, whether it's India or European nations or America. So I think with due respect to him, he has never figured it out that if there is a vacuum of leadership, whether this theory will work or not.